Hey guys, welcome to the Tax Facts channel. I take tax information straight from the IRS publications and I make videos with examples to help you better understand this complicated tax codes. For those of you with prior tax knowledge, leave a comment below. Let me know what you think, what your thoughts are on this video. And those of you who are new to taxes, don't know where to begin, what to look for, I think you'll really like this video, and a lot of the other videos I'm going to be making will be perfect for those starting out with no knowledge. So please be sure to like, subscribe, and leave any comments below of what you may want to learn specifically about. I can make videos. I'm looking for ideas, so please let me know. Okay guys, welcome back to part 3 of the filing information. This is regarding the income tax return itself. If you saw part 1 and 2, great. I really hope you learned something from those. And I think you'll like this video as well. This has a lot of good information. This video, we're going to be discussing record keeping. We're going to be discussing why we need to keep it, what records we should be keeping, and how long should we really be keeping this information. A big question we always get is, after we file our taxes during that tax season, can the IRS come after us for any additional taxes owed? And the answer is yes. So just like we have a period of limitation that we can amend our return for additional credits, they can audit our returns as well. So they have a period of limitations that they can come back after us and make sure that the deductions and the credits we took were valid. So that's why it's very important to gather all the information and records that you have so that you can file your return as accurate and truthful as possible. We want to avoid any penalties. We want to avoid any errors in our tax return. Okay, so we're going to get into a lot of this information. And that's why I said take a look at part 1 and 2. This is all filing information. We want to make sure we're doing the best that we can to not get audited. Or I should say, it's okay if we do get audited, as long as we keep our records straight and that we are filing the guidelines. We have nothing to worry about. They can do their thing and we can provide the records that they need. Okay, so let's get into it here. Why do we need to keep records? Good records help you identify your sources of income. They'll keep track of your expenses. They'll track the basis of property. They help prepare tax returns. And they help support items reported on your tax return. The IRS may question an item on your return, and your records will help you explain any item and arrive at the correct tax. If you can't produce the correct documents, you may have to pay additional tax and be subject to penalties. These next few slides I'm going to be discussing record keeping, how long you need to keep your records for, what records exactly should you keep, all these important things that you need to keep in mind during tax time, or actually throughout the year so you can be prepared for tax time. So you must keep records so that you can prepare a complete and accurate income tax return. That word accurate is very important. You want to make sure you have an accurate return. You don't want to be getting audited for any discrepancies on your return. Now, the law doesn't require any special form of records. However, you should keep all receipts, canceled checks, or other proof of payment and any other records to support any deductions or credits you may claim. If you file a claim for a refund, you must be able to prove by your records that you have overpaid your taxes. How long must I keep these records for? You should keep these records that support items shown on your return until the period of limitations for that return runs out. The period of limitations is the period of time in which you can amend your return to claim a credit or refund, or the IRS can assess additional taxes. Now, I provided table 1 through 7, the periods of limitation that apply to income tax returns. Unless otherwise stated, the years refer to the period beginning after the return was filed. Returns filed before the due date are treated as being filed on the due date. So here's Table 1-7, Period of Limitations. Remember, this is the time period for you to amend your return or the time period for the IRS to investigate you for additional taxes. If you forgot to claim the American Opportunity Credit, you have the later of 3 years or 2 years after the tax was paid to amend your return to claim the credit. There's no limitation period if you did not file a tax return that was required. Now that we know the importance of record keeping and how long we should keep our records for, let's talk about what records we should keep. So we want to keep our income records. We want to keep any records pertaining to our wages, our dividends, interest, even partnerships or S corporation distributions. Your records can also prove that certain amounts aren't taxable, such as tax-exempt interest. We also want to keep expense records. These expense records prove the expense for which you can claim a deduction or credit on your tax return. Your deductions may include alimony, charitable contributions, mortgage interest, and real estate taxes. You may also have child care expenses for which you can claim a credit. Next, we can claim any records pertaining to our home. These records should enable you to determine the basis or adjusted basis of your home. You need this information to determine if you have a gain or loss when you sell your home, or to figure depreciation if you use part of your home for business purposes or for rent. Your records should show the purchase price, the settlement or closing costs, and the cost of any improvements. They may also show any casualty losses deducted and insurance reimbursements for casualty losses. Next, we have our investment records. These records should enable you to determine your basis in an investment and whether you have a gain or loss when you sell it. Investments include stocks, bonds, and mutual funds. Your records should show the purchase price, the sales price, and commissions. They may also show any reinvested dividends, stock splits and dividends, load charges, and original issue discounts. Now we have proof of payments. One of your basic records is proof of payments. You should keep these records to support certain amounts shown on your tax return. Proof of payment alone isn't proof that the item claimed on your return is allowable. You should also keep other documents that will help prove that item is allowable. Generally, you prove payment with a cash receipt, financial bank statement, credit card statement, canceled check, or a substitute check. If you make payments in cash, you should get a dated and signed receipt showing the amount and the reason for the payment. If you make payments using your bank account, you may be able to prove payment with a bank statement. Moving on, we have account and pay statements. You may be able to prove payment with a legible financial account statement prepared by your bank or other financial institution. You may have deductible expenses withheld from your paycheck, such as medical insurance premiums. You should keep your year-end or final pay statements as proof of payment of these expenses. Lastly, we have the property. Keep records relating to property until the period of limitations expires for the year in which you dispose of the property in a taxable disposition. You must keep these records to figure your basis for computing capital gain or loss when you sell or otherwise dispose of the property. Generally, if you received property in a non-taxable exchange, your basis in that property is the same as the basis of the property you gave up. You must keep the records on the old property as well as the new property until the period of limitations expires for the year in which you dispose of the new property in a taxable disposition. Alright, this concludes part 3 of the filing information. be on the lookout for part 4. And just as I mentioned in the previous 2 videos, the information in this video was directly from the IRS Publication 17. And please guys, like and subscribe, leave any comments on any suggestions of new videos to make, or any comments on this video itself. Also, you can check me out on TikTok and Instagram. I put up videos that I call Tax Facts in a Nutshell, and it's just basically the highlights of that topic. You might like that. Check them out. Let me know what you think.